Ladies and gentlemen, good day and welcome to the V-Guard Industries Limited Q4 FY23 results conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, I welcome you all to V-Guard Industries Limited Q4 and full year FY23 earnings conference call. Today we have with us senior management represented by Mr. Mithun Chittalapalli, Managing Director, Mr. Ramchandran V, Director and COO, and Mr. Subhashran Kasturi, Senior VP and CFO. Without taking much of time, I would like to hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir. Thanks.
Thank you, Deepak and PhillipCapital for hosting this call for us. A very warm welcome to everyone present today call. Thank you for joining us today to discuss the operating and financial performance of our company for the fourth quarter and the full year of FY23. I trust all of you have had a chance to refer to our investor presentation, which was shared yesterday. We reported consolidated net revenues of rupees 4,126 crore in FY23, which is higher by 17.9% on a YOY basis. Excluding revenues from Sunflame, the underlying revenue growth is 16.3% on a YOY basis, ahead of the CAGR of 11.9% over the period from FY19 to FY23. During the year, the South market grew by 9% YOY, while the non-South markets grew by 26.4% YOY. With continued strong growth from non-South markets, their contribution to overall revenues has crossed 45%, providing the business with a diversified revenue base. In our electronics segment, comprising of stabilizers, digital UPS and inverters, we reported revenue growth of 21.9% YOY. In the consumer durable segment, where we market fans, water heaters, kitchen appliances and air coolers, we registered a growth of 20% YOY. The consumer durable segment is achieving meaningful scale in top line, and we are sure that the benefits of operating leverage will soon become visible going ahead. In the electrical segment, comprising of wires, pumps, switchgears and modular systems, we registered a growth of about 11% YOY. FY23 has been a difficult year in terms of margins for our industry. After a few challenging quarters caused by significant input cost challenges, Q4 margins have shown an improvement over the previous quarter. The benefits of stable commodity prices and the charge out of high-cost inventory are beginning to flow through. We expect the gross margins to further improve in Q1 FY24. In Q4 FY23, we have taken a P&L charge of about 10 crore towards one-time expenses relating to the acquisition of Sunflame and Simon Electric. The advertisement and promotion spends are also higher as they are steadily returning to the normative levels. PAT in FY23 is 183 crore compared to PAT of 228 crore in FY22. It is pertinent to note that in FY22, we had a prior year tax credit of 8 crore as we switched over to the new tax regime. In FY23, the tax benefit arising from the Simon merger has been shown under the other comprehensive income. Adjusting for that one-time expenses incurred in FY23 and the tax benefit in the base year, the profit after tax is fairly similar level in FY22. As we had indicated earlier, we are carrying higher inventories to mitigate risk of supply disruption and would like to revert to normative inventory levels over FY23. We have made substantial progress in doing so, and we have released close to 200 crores worth of working capital with the scope of another 70 to 80 crores to be released in the following quarter. During Q4 FY23, we completed the acquisition of Sunflame and the merger of Simon. In the case of Sunflame, the initial post-transaction work is complete and the business integration is underway. Hiring for key positions is complete and leadership team is now in place for Sunflame. Over the next 6 to 9 months, we will review the portfolio, strengthen channel presence and undertake interventions in technology and process capabilities. The Simon merger has been completed with effect from 25th of March 2023. We have started running the business and have identified areas to focus on the near term. These M&As are all good strategic fits to V-Guard and with multiple levers for synergy benefits. The Board of Directors have recommended a final dividend of rupees 1.3 rupees per equity share on a face value of rupees 1. With that, I conclude my opening remarks and would like to thank Deepak Agarwal and the team at Phillip Capital for hosting this call and would like to request the moderator to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Hi, good evening, good afternoon, and thank you so much for the opportunity. 3 questions. Firstly, on South market, it's been underperforming for V-Guard for the year, for the quarter. What's your reading, Mithun, on this? Is it more competition or is it anything else? Especially wires and durables for fourth quarter looks really low to me.
Okay. The South market is fairly mature for us. We don't have that much avenues of growth in terms of distribution expansion. So most of the growth is organically coming, and some of the growth is coming by way of introduction of new products. So with the kind of challenging environment as we saw in the last year with huge inflation and softening consumer demand, there has been, the growth of 9% is what we have achieved. But having said that, even traditionally pre-COVID, South was growing at something like 8 to 9%, and non-South was growing at something like 22%. And that's how the average is coming to around 15%. So we are okay with the South, a market growth of 9%. It's not very high, but it's probably reflective of the fact that it's a fairly mature market. And sorry, the second question was?
No, second question essentially was a reflection of fourth quarter performance also, that wires durables top line look pretty low to me. But the more important question here is that since you said South, we cannot expand distribution more, so this performance of 9% YOY and maybe 15-20 non-South, does that continue next year? That's more important to understand.
Yeah, I think this was the of course as we grow larger in non-South, the base is getting large, but we still have some white spaces even in non-South. So we are probably only still present in the larger towns and cities in non-South. We have not really explored the upcountry markets much because we're doing a new brand. So we still have a lot of levers in non-South to grow. And if you ask me, non-South market is actually roughly 60% of the total India market, and about 35 to 40% is the southern part of the country. So in that sense, we still have some more way to go, in terms of distribution expansion.
Perfect, got it. Secondly, on Sunflame, so in your press release, you have given Concall P&L as well as the ex-Sunflame P&L. I'm just trying to remove the EBITDA difference. That's 10 crores. Obviously there is a one-off sitting there which is 10 crores, which is including other expense. Is that correct, Sudarshan?
So you're trying to work out Sunflame EBITDA, is it? That was 8 crores for the quarter. That's the difference.
So, but the EBIT reported is 14 crores. So I was a bit confused. How's that?
No, the Sunflame, we'll recheck that, but what I remember seeing was Sunflame revenue.
Revenue was about 57 something, and EBITDA was...
Yeah.
The other 10 crore, what you mentioned as one-off, is in the V-Guard cost.
It's sitting in other expenses of V-Guard.
Okay, so maybe I'll repeat my question. What I meant is Sunflame difference is 57 on revenue. The EBIT reported in Sunflame is 8 crores. Is that correct?
8 crores, yes, correct.
Can I get the EBITDA number for Sunflame?
Just give me a moment. I'll tell you.
Okay. We'll come back on that.
I'll come back on that.
We'll connect offline on this number.
Okay, and just last question on the debt side. So my understanding was we had 400 crores cash and we were drawing about 300 crores for the acquisition. When I see the balance sheet right now, it has a 270 crore long term, which I understand is more for Sunflame, but why do we have a 150 crore short term? I just need to get a clarification on that. That's all. That's my last question.
Yeah, no, we took a funding mix like that. We took a long-term funding of 275, and then the short-term reflects vendor financing, which is a working capital facility. So that was the funding which we used.
So V-Guard was not using its working capital facilities, and we decided to use a mix of the working capital facilities to a smaller degree, and of course long-term debt for a larger degree. So that gives us some flexibility to pay the debt down as we go forward.
Got it. Perfect. Thank you so much. All the best for the year. I'll come to you.
Thank you. We have the next question from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is again regarding Sunflame integration. You did speak about that a little bit in your opening remarks, but could you throw some more color as to what are the key steps of integration that you propose to take, both in terms of back-end integration as well as front-end integration? And also if you could share any milestone revenue or cost synergies that you propose to get out of this integration.
Okay. Ram, you want to take this?
Yeah, Mr. I'll do that. I think, Sunflame is going to continue as a standalone entity operationally, and it will run independent of V-Guard so that the two brands are able to compete. I think they also have different advantages, in terms of cost structure and go-to-market. So I think at this stage, we are keeping these two separate. So that's the first part. I think in terms of how we will try to create benefit and impact on Sunflame, I think some of our central capabilities like maybe freight, procurement, like for example, if you may talk about customer service, so these are areas where we will be bringing our capability and know-how to benefit the Sunflame business. Yeah? As far as so I think that was your question, right? So there is no direct integration between Sunflame and Simon, right? So sorry, Sunflame and V-Guard. Yeah, we're going to operate separately.
Right, but in terms of say production, so V-Guard outsources, if I'm correct, about 50% of the production.
No. So as far as kitchen is concerned, again, I think in the short term, they continue to run as separate entities. V-Guard is setting up its own manufacturing facility, which is underway in Vapi. And that's fundamentally we are looking at the gas stove and mixer grinder. At this stage, immediately, we don't have any plans to shift our sourcing of gas stove to Sunflame. But these are things that because we are putting our capacity in place independent of Sunflame.
Understand. And what is the capex guidance for FY24?
Capex will be around 100 crores.
Understand. And any cost or revenue synergies you would like to quantify that you propose to get from Sunflame, say in year 1 of integration or year 2 of integration?
I think at this moment we won't like to quantify anything, but yes, there are going to be synergies in sourcing, freight, packaging, stuff like that. And there may be even synergies by, sourcing through Sunflame vendors for V-Guard as well, especially for gas stove and chimney. So these are things at the moment we are not going to quantify. But I think for us, the low-hanging fruits for Sunflame will be, Sunflame today has very little presence in e-commerce, which is usually about 25 to 40% of the kitchen business in India today. And Sunflame has very little presence in modern trade. Again, maybe 20% of the business in India today. So barring GT, we will be aggressively driving the other channels for Sunflame. Sunflame is very strong in canteen and GT, but the other two channels is missing from its portfolio. So our focus will be on, driving revenue growth for Sunflame first, and then, working on, cost reduction and synergies.
Understand. Second part of the question, Nitin, is also about the distribution network. Are there any advantages in terms of cross-selling that you perceive? Because Sunflame is more non-South. And also, if you could quantify what is the distribution or the retailer footprint of Sunflame versus V-Guard?
Yeah. So Sunflame follows a slightly different distribution strategy. Sunflame works with super stockists or super distributors. So in each state, they have one or two, or in some cases, three very large distributors, where Sunflame sells its products on a cash and carry basis. And the distributor then, stores and, gives credit to the retailers in GT, and then they have their own salespeople on the ground selling it. So it's a very different system from V-Guard, where V-Guard is more, working directly with retailers, and we have a very large sales force, and we have a lot of smaller size distributors. So that's slightly different. So immediately we are not looking to, change much. But yes, in South India, Sunflame's presence is very low. They get only 15 to 18% of their revenue from South India. So we are aggressively going to grow the Sunflame business in South. Now we are in the process of hiring people for Sunflame in South. They have a very small team, and we will be aggressively driving that. Right now, we are not looking to change the way Sunflame is doing its GTM. There are advantages to the way they are doing it, and also there are some disadvantages. But at the moment, we are not looking to change it. But at some point in the future, yes, we will try to see what is the best way to, reach customers of Sunflame, whether we should follow their old selling strategy or, move more in line with V-Guard's, GT.
Sure. And just one last question from my side regarding the core V-Guard business. Is there any pricing action that you have taken in Q4 or Q1 up till now? And how do you see the demand scenario and the channel inventory? That's it from my side.
So there has been, reduction in commodity prices, as we move from Q3 to Q4, and we are also seeing further reduction in commodity prices as we move from Q4 to Q1 of this year. So this means that it kind of is not required that we need to take any more pricing action. I think if the pricing remains stable and the raw material prices are staying where they are, we should inch back slowly in the next 4 months back to the pre-COVID levels of gross margin. So it does mean that we have finished that super cycle inflation of commodities, and we are back to where it was probably pre-COVID.
And demand and channel inventory?
Demand is weak, as you can see from our numbers and probably our peers. The demand has slowed down quite a bit in the country. I think the all-round inflation of food, fuel, everything has taken a toll on consumer sentiment and demand. And of course, the constant increase in interest rates also has put some, spoke in terms of ability for retailers to borrow and all that. Basically a lot of tightening has gone down. So retailers are also not stocking like they used to before this whole thing started. But we think that maybe Q2 onwards we should start to see some revival in demand because now fuel prices have come off. We are seeing prices of a lot of the other items have also come down. So I think once, and we are hoping that with these kind of reduction in inflation, hopefully we will probably enter the reduction in interest rate cycle, and which should fuel demand. And I think that sometime middle of next year this year this should happen.
Sure. Thank you.
Thank you. We have the next question from Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. Can you hear me, sir?
Yes.
Okay. Sir, the first question is with respect to Sunflame. Is it right understanding that earlier we were talking about acquiring this business and being part of the standalone, and now we are talking about running this as an independent business? Is that understanding right?
Yeah. So around clear there.
Yeah. Sorry, if I understood your question correctly, you were wondering whether earlier our intent was to merge it and now we are running it separately. Is that what you're saying?
Yeah. Yes.
Yeah. No, that's not correct. I think that The reason that we are running this independently is fundamentally each business system has its advantages, right? And therefore, we are keeping them apart, right? The cost structure and the GTM of the two businesses are very different, okay? And that's the reason why, at least in the near to mid-term, right, they're going to run as separate entities, yeah? Because there is a risk that, there will be dilution in focus for Sunflame, right? So we would like to focus and grow the Sunflame business. As Mithun said, we believe there is a fantastic opportunity to grow the Sunflame business. I mean, it's an extremely reputed and well-known brand with a very, very high top-of-mind awareness and recall in the kitchen category. And there are very strong growth levers like South, like modern trade, like e-commerce, yeah. And our focus is, we think that the value that we can create, right, by focusing on Sunflame is far more than integrating it, because integrating it will certainly bring efficiencies, but I think the focus and the ability to grow the business will get impacted. That's the reason why we're going to run these two separately initially, right? So we also have our own kitchen business, and we need to figure out how we are going to play the two brand architecture, yeah, to grow more aggressively in the kitchen business. So I think it's fair enough to say that it was never our intent that we will immediately merge that business into V-Guard. It was always our intent that we would like to run these two businesses separately so that we can focus parallelly, because what has also been happening is a lot of work has happened within V-Guard on the V-Guard kitchen business. As you can see that, we have set up our own manufacturing facility, and we have our own growth plans for, as with all inorganic, right, till it is done, there is always uncertainty, right? So we had our own plans for the growth of the V-Guard business, and we made investments for the growth of V-Guard business, right? And bringing them together is not, is detrimental to the growth of both these, right?
Understood. The second question I had, sir, is it possible for FY23 as a whole, if you could give some clarity in terms of the growth in stabilizer, inverters, cables and wires, switchgear, etc.? May not give the mix, but at least the growth, if it is in percentage now.
So we don't give out the product wise numbers, but I can tell you the stabilizer business has recorded a pretty strong growth, and that's been primarily responsible for driving the growth in electronics. And the rest are okay. I mean, like the wires business has done a decent job. It was pretty good in the first 6 months, but last 6 months the growth has slowed down because of reduction in copper prices and destocking by retailers. So that's the broad color I can give on the various segments. So consumer durable, as you know, is the segment with the most number of new product categories. So it's on a low base, growing fast. But of course, margins are a concern, and I think we are able to see some significant improvement in margins in CD, even in this quarter and going forward, because the margins in both water heater and fan was impacted in this commodity cycle, and the fans, at least we are able to see good improvement in margins going forward. And I think once the water heater season starts, I think there also will start to see improvement in margins as we consume, the new lower cost RMs.
Understood. Any broad number you would talk about in terms of the growth for FY24? Would that be in double digit, high single digit, mid-teen? Any color given the competitive?
So we are hoping that we can grow by 14 to 16% in the coming year. That is, FY24.
This is including Sunflame you're talking about, right? So it has a.
No, this is without.
No, without Sunflame.
Sunflame will be an additional number.
Right. And within this 14 to 16, what will drive, if you could give some more clarity on that, sir?
So what we can see is the electronic segment will continue to grow well. I mean, we have had a good start to the year. Last year we did not have a very good Q1 for electronics, and that that impacted the first 6 months growth for electronics. So electronic segment it's rebounding back to its pre-COVID kind of growth. I think so. It'll have like the CD will go at high level and electronics followed by electronics and then electrical. So that's how we see the growth this year.
So the current participant seems to have dropped from the queue. We will proceed with the next question, which will be from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Yeah. Hi, can you hear me?
Yes. Sure.
Yeah, hi, sir. So in the electronics segment, your revenue growth, I am seeing it on a Q-on-Q basis. It has increased sharply, but vis-a-vis, if you see the margins there, that has not really improved. So can you just throw some color on that as to what is not really driving the margins there? Is it the battery?
No. So the electronics segment, there is two large categories. That is the stabilizer business and the inverter business. What happens is in every quarter the product mix is different. So in Q1 and Q4 we sell a lot of air conditioner stabilizers and inverters and batteries. Whereas in Q2 and Q3 it's mainly the refrigerator and television stabilizers and to a lower extent inverters because it's off season for inverters. So the margins for the non-air conditioner stabilizers are fairly high, and that's why the margins are looking good for Q2 and Q3 for electronics. So the better way to compare them will be because the product mixes are different in different quarters. So maybe it's better to compare them YOY basis in terms of margins.
Understood, sir. So, and second question I had was particularly in the battery segment. So in quarter 3, the lead prices have increased sharply, and we weren't able to pass on the price. But now in quarter 4, we've seen that the prices for lead has kind of softened. So can you just throw some color on that as well as to how the inventory is? Do we have high-priced inventory, or how are we moving there?
So battery is a perishable product, so we don't carry much inventory in batteries because it's got a finite shelf life. So typically in the case of batteries, we try to work with as low inventory as possible. Having said that, if you ask me whether the margins for batteries are out of the woods, not yet, but maybe we're getting there. But in Q4, definitely the battery margins were still stressed.
All right. And sir, last question. So where are we in terms of manufacturing our own chimney versus importing? So have we ramped up the manufacturing facility in quarter 4?
So in the case of V-Guard, particularly, V-Guard is moving its chimney, procurement from China to, domestic vendors. V-Guard is not planning to set up a manufacturing for chimneys. However, Sunflame is manufacturing chimneys in India. So Sunflame, in case of Sunflame, we are seeing some improvement in margins because they have moved from importing to making chimneys in their new manufacturing facility in Faridabad. So in the case of Sunflame, that is happening. At some point in the future, when the manufacturing system in Sunflame has stabilized, we will see the possibility of supplying chimneys to V-Guard as well. But at the moment, they are concentrating on only supplying for Sunflame brand.
Understood, sir. So that is all from my side. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, one question regarding the demand outlook has considerably slowed down. So what is our internal thought process? When do we see the demand recovering back? Any number that you can see, maybe 2 quarters, 3 quarters? And again, what are the 3 key important things that V-Guard is doing to in a way increase the demand? Also, can you indicate any market share gains or losses in past 1 year in the major categories of V-Guard as well as Sunflame? Yeah, that's it from my side. Thank you.
Okay. So yeah, the demand continues to be slightly weak. But having said that, there was decent sales for stabilizer, in March and April. However, after that we have had some unseasonal rains and it's slightly impacted. But I think overall we are still hoping to do a decent Q1 for summer products. The demand for fans is still a little bit subdued because of the changeover to the new star rating regime and the fact that the channel is still sitting with inventory of old models which was pushed out by all the brands in Q2 and Q3. So that's continuing to be slightly a drag on the overall fan demand. In terms of what we are doing is, we are constantly working on, so we are having some launches for fans in the upcoming quarters, which we think will have some good positive impact on demand. We are also going to have some launches for water heaters in the upcoming season. So I think some of the product launches that is going to happen will have some positive impact on product demand. And I think the good news is the inflation has peaked. It has started to come down at least for the last 4 months, and it is continuing to as there is going to be reduction in prices of all commodities, including food and non-food and fuel and everything. We hope that the confidence will come back for consumers to start again to spend money. So I think that's probably going to happen in mid of the current financial year, and that's somewhere in the festive season we are expecting to see some revival in demand, and that's what we see.
Thank you. Yes, sure. So and the key market share.
Okay, so we don't give out any market share numbers, but I can say that in the last 2 to 3 years, V-Guard has gained some market share in fans probably, and we have also gained some market share in water heaters. We also had a very very low presence in e-commerce business, and we have also probably started to add some market share in the e-commerce side, where traditionally V-Guard was probably a late entrant and a slow mover.
Okay, sure, sir. Thank you. Very helpful.
Thank you. Participants who wish to ask questions may please press star 1. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the follow-up. I got disconnected earlier. What I wanted to also check in terms of
Sir, sorry to interrupt, but the volume for you on your line is very low. We request you to please use the handset and speak closer to the mic.
Is it better now?
Yes, this is much better.
Yeah, thank you. What I wanted to understand is in terms of the distribution, where are we? What kind of growth are we looking at in terms of number of dealers and retailers? If you could also quantify as of March, what is the retail and the dealer count?
Okay, Ram, you want to take this?
Yeah. I think we have traditionally been growing our retail base annually by between 5 to 10,000. 5% to 10%. So typically, adding between 3 to 5,000 retailers every year, right? So and we are very much on course with that kind of a.
If you could help us with the current statistics.
I'll give you precise numbers. Maybe we'll share offline, but it should be in the region of 50 to 60,000, right? Which should be our current base, right? That's why I said 5 to 10% at 3 to 5,000. Yeah.
Right. And sorry, I missed out in the earlier question. Did you also give some clarity on in terms of the Sunflame? What kind of revenues can one look at given this is the first full year of operation?
Oh, you're asking about Sunflame?
Yeah, now I'm asking for Sunflame.
Sunflame FY. So Sunflame, we are expecting to do close to 400 to 425 crores, somewhere in between that in the current year.
And the margin what we had in fourth quarter, sir, Sudarshan sir, have you given the EBITDA number like for Sunflame for or EBIT number?
The EBITDA number for Sunflame is 9 crore. The details are given in the presentation we circulated last night.
Okay. Okay.
Sunflame will do, between 12 to 13% EBITDA because we are also going to invest a lot of the, money back into A&P and, strengthen the brand and a lot of the other investments will go in. So, maybe the Q4 EBITDA is looking a little high because there is not much, activity in terms of A&P and all that in Q4. But in this year we will be, starting to spend again.
Understood. And just one more question, with respect to the competitive intensity. I remember, in the earlier calls you have talked about, the competitive intensity being way too high in southern market for some of these categories like wires and, water heaters and all, given our presence. So, if you could talk about how the current scenario is. Are you seeing the intensity is broad-based across the pockets, same intensity, or is it kind of moderating?
So, Ram, you want to take this?
Yeah, sure. I think in general, I think the growth outlook has been weaker for quite some time now. I mean, over the last few years, and that's kind of triggered hyper competitiveness as every company has got into adjacencies. Yeah. So I think these forces are very much there. We are seeing some broad contours of consolidation because I think, continuous years of what I would say, attempting to break in and, not having healthy outcomes is showing in some instances and I think companies are, looking at, how to organize towards that objective. But I think for now, I think the competitive environment stays, what I would say, it continues to stay aggressive. But I think we should see some semblance of sense maybe in a year or two, maybe 12 to 18 months down the line. I think all incumbents are trying to hold ground, right? So there is not much scope for in an environment like today where growth has been significantly lower, right, for the market and the industry compared to historical growth rates, which pre-COVID growth rates. So I think companies are holding on to that positions, right, and that's kind of making it difficult to move forward, through strategies which are hyper competitive in nature. Yeah. So I think we should see things getting better, but right now things will continue to seem.
Understood. And any comment on the margins? Like earlier, you had about 100 bits margin improvement, gross margin improvement every year. So just wanted to understand if that stays.
I think, our primary task this year is to get back to what the gross margins were originally. So, while Q4 there is some improvement, some more has to come. We have to first get to where we were and then improve from there.
Okay. Great, sir. Thank you so much.
Thank you. The next question is from the line of Swati Junjunwala from BOB Capital. Please go ahead.
Yes, thank you for taking my question. Just one question on the ad spend. So you ended this year with ad spend of around 2.1%, and normalized ad spends are around 4.5 if we see pre-COVID level. So do we expect this 2.1 to go to 4.5 exactly, in FY24 itself, or do we expect it to go to around 3.5?
So our historically our ad spend is hovered between 2.5 to 3.5%. When the times are tough and we are not able to spend, it has come down to 2.5, and normally it's gone to 3.5. So obviously, if our gross margins recovers to pre-COVID level, and the environment remains, like I'm saying, these kind of hyper competitive activities are not too much there, and the environment is conducive, yes, we will may probably move to 3% of revenue into A&P and then progressively increase from there.
Got it. And when you say pre-COVID gross margin, that's around 33%, if I'm not wrong.
Yes, around 32 to 33% used to be. Yeah.
All right. Thank you.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Yeah, hi sir. Thank you for the follow-up question. Sir, could you just throw some light in the pumps business? The last time you had mentioned that the water level was good and therefore the demand was subdued. So what's happening in this quarter?
So the pump business had a very rough FY23, and we have noticed that most companies have had a similar tough time in terms of lack of growth, and of course which also means hyper competition and lower priced model launches onslaught and all that. We are seeing some improvement in sales in May, which means that after a long time it's starting to grow. So we'll wait and see what happens. Even start come off from their get very good rain, so water table remains very high throughout the year. I'm hoping that this year will be a little better. Having said that, we'll wait and see. It's still early days, but there are some indications that this year the pump business should do much better than what we did last year.
All right. And so my next question is more on the broader macro side rather than very company-specific numbers. So you've been continuously telling in your con calls that you want to protect your margins and you do not want to go to a price cut strategy just to gain market share because that is not sustainable. And you say that everyone else can do it. So after a point, you stop to gain market share really. So I want to know, say, if you're protecting your margins at the cost of your top line, how quickly can you gain back the lost share? Because in this hyper-competitive market, I believe losing market share is more costly than protecting margins. So what's your take on that?
No, I think as a strategy, we try not to initiate price wars. But if some competitor, wants to do it, we will match it and we will defend ourselves. For example, we have lost huge amounts of margins in our water heater business by simply trying to defend our market share. And then only defended, in fact, we have gained back some of the lost share over the last 3 years. So it's not that we are sitting idle and waiting for others to get our share. So that's what Ram said, that all the incumbents are holding on to their share. And we are doing the same. So it's not like we are letting anyone take any market share. What I meant to say that we will not initiate price wars or those kind of things to take. We will probably not start it, but if someone starts it, we will respond equally back.
Got it, sir. Got it. Thank you. That's all.
Thank you. Ladies and gentlemen, to ask a question, you may press star 1. The next question is from the line of Rahul Agarwal from Init Capital. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just 2 questions. Firstly, April, May, I'm getting feedback from the country that the weather has been funny and, rains have been there in north and west. We obviously saw the IPL final also disrupted. What's your view in terms of north-south performance? How it's been?
Yeah, so our numbers in south and east have been pretty good, and north and west has been subdued for summer products. That's whatever you have heard, and whatever you've been reading is correct. North and west practically did not have much of a summer, where every 4th day or 5th day there was rains, and so it has been funny. But having said that, eastern markets and southern markets have done well, where there was pretty warm weather. Again, this is not across, it's state specific. So we have had some mix of good, summer and not so warm summer, across.
So does that impact our electronic sales? Because I think AC is quite a large business for us. My sense is AC secondary sales are pretty weak. What primary is, you would have seen any issues there? Or maybe fans, how's that been?
So fan is continuing to be slow for a bunch of other reasons apart from even weather. Like the higher level of inventory of old models sitting in the channel because of people, all the brands, flushing out all the old inventory in Q3. That's continuing to take some impact because the working capital of all the retailers are, blocked with old inventory. So I think that tells us that's going to be a challenge. In the case of air conditioning stabilizers, we had a good start to the year in the month of April, but May has been very weak. So we'll wait and see. It's not yet over. We still have one more, at least till June 15th, in North, there used to be summer. So we'll wait and see. But it's not been, we have had a decent performance by the stabilizer division in April, May.
Got it. And lastly, on Sunflame, so I got the fourth quarter EBITDA. What I wanted to ask is, for full year fiscal 23, would you share revenue, EBITDA, and PAT for the company, please, for Sunflame?
That the previous periods don't belong to us, so no.
Yeah, I understand. I understand that. I just need the base.
We won't be able to give you the full year number. The 2.5 months is what we consolidate.
Okay, sir. Okay, no problem. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Kiyur from ICICI Prudential Life Insurance. Please go ahead.
Thanks for the opportunity. So just want to understand, if I'm not wrong, you mentioned about 15% kind of 16% kind of growth for the next full year. So looking at this demand challenges, what will drive this growth, particular product or particular geography? And basically, will it be back-ended since near-term demand challenges are there? So if you can just dissect this 15-16% kind of growth number.
Yeah, so that's the kind of target we set ourselves, when we had our, annual, planning meeting, annual AOP in the month of March. But that also assumed that we will have a pretty normal summer. So some part of the growth could get impacted. Yes, the demand environment is a bit weak. Summer has not been very robust. It's been okay, in some places. It's not been okay in some places. So yes, there is a chance that some of this growth will also come in the last, 4-5 months as we prepare for the next year summer. So I think we will still try to grow, 14 to 15%. But yes, there are some challenges what we see in terms of bad weather and demand, both constricting our ability to grow in the first 4-5 months. But I think going forward, as like I said, we are expecting the effect of inflation is kind of wearing down, and as people have more money in their hands because the fuel, food and other inflations are coming down. We are hopeful that consumers will be coming back.
Okay, thanks. Second question on the fan side, you mentioned about the higher inventory because of stocking, because of the rating change. So now, I mean, we have always considered fan as more of, say, necessity than discretionary. So this issue is because of the higher stocking, or there are challenges at the secondary sales also? So if you can just throw some light on that.
I think what happened is we had a abnormal sale in Q3. I think most companies have reported very good, very good sales in growth in Q3. But we actually ran out of inventory by October end or something like that. We actually did not have an inventory to sell for the old model. So I think whichever company had, a lot of stock of the old model, they just gave, whatever kind of discount they wanted, and then sold them in the market. Also, there is a price increase from the old model to the new model. So the retailers were very enthused with the delta of buying something at potentially 20-25% discount from what the new model will look like in January. So that has enthused a lot of these guys to stock up on those products, and that's what's creating the slowness in demand.
What the secondary consumer sales is happening, or there is lull at that?
Even there, I think the summer was not as strong, right? So even there, I think, at least in North and West, the summer has been quite weak. Eastern markets and southern parts of South markets, summer has been good, and we are seeing secondary liquidation. So The secondary liquidation has not happened also to the extent that it would have happened, had it in North and West. So that also is going to play delay the delay the demand for funds, new funds.
Okay, understood. So just last one question. So on the Sunflame side, so as you mentioned that V-Guard has kitchen appliances portfolio, so as Sunflame. So any timeline or how any broad thought we would have definitely given before acquiring the company that how we will navigate through this. So I mean, what is the medium-term plan for both of these brands, and it will be geography specific, or do you layer it one over the other? So what is the thought over medium term?
Yeah, Ram, you want to take this?
Yeah. I think, at this point in time, we would not like to outline in more detail. I think we are also doing some work because, we need to get into the company and the brand and understand the business and the brand and its customer base better, right? So we are in that stage of the journey. It has been, we will be playing a two-brand strategy. So it's not like it's one or the other. It will be V-Guard and Sunflame. The contours of, how we are going to play this, I think that's something that, we are in the course of exploring and discovering, right? So I think that is a work in progress. I think, whenever that, we would be in a shape to share, I'm sure we will share. But at this stage, I think, we are still in the discovery phase, right? I think mostly we've been focused on taking control of the operation. It was a promoter-driven business, right? So, but taking control has been the primary focus for us in the first 6 months. And then, we will move forward towards, what I would say, how do we compete and how do we grow the combined franchise, right? But yes, I think what we are clear about is both brands are going to coexist, and that, we will have a strategy and approach that will allow both brands to, what I would say, play in the marketplace, focusing on different consumer segments, right? So that's going to be our approach. Yeah.
So thanks a lot and all the best to the team. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Yeah, so my question is more of a follow-up on what the last participant had asked. So in fans, what I understand is the market is very saturated and the demand is mostly a replacement demand, which is usually slower than the first-time demand. Now, having that background in mind, just 2 days ago, Atomberg raised good amount of money. Now, understanding that their moat was BLDC, which is now replicated across players. So that moat goes away. So then is it true to assume that there is still a very big market which remains for fans? How do you see it in the long term?
Look, fan is a very, very old product. It's not a new category as such. So you're right in thinking and discovering that most of the demand is replacement. Of course, there is some new demand, as people build new houses, people build new apartments, buy new apartments and furnish it. Fans will get sold, but a large part is replacement demand. What has been happening in the fan space and across broadly with Indian consumers is as the value of the houses go up, as the amount of money people are spending into interiors is going up. The spending on interiors like decorative fans, premium interiors and all that. The average price of the fan is going up. So although the number of fans sold may not go up significantly, we believe the average price per fan will continue to go up, and even BLDC is going to increase the prices by 20 to 30% per fan. So what will probably happen is the market growth for fans a lot of it will come from the value growth of fans. And today, some segment of people are spending money in terms of fans, but there's still a large part of the fan business is still economy. So once what we believe in the next 10 years will happen, slowly the economy segment will reduce to probably mainly institutions and those kind of customers buying in, and then the retail customers will starting to spend more, and it's already started to happen. So in the case of fan, that is the case. We don't comment on competitors and all this, but yes, Attenborough is a startup and they are running the business like a startup. So once we would like to see every company in the business to run a profitable business.
Understood, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
I would like to thank Deepak Agarwal and Philip Capital for hosting this call, and thank you all for your patient listening. That's all from my side. Thank you.
Thank you. On behalf of Philip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.